Hello, long uptrend line swing trading strategy, swing trading stock selection guide. Well, we have our stock watch list of large cap stocks that we selected using some criteria. First, you will pull the stocks to your spreadsheet and you can use criterias. Because we are using long option long swing trading strategy, our criteria was to have upward or growth and dip type of stocks. So we pull out LLCs out just to have companies, and we want upward stocks that went public at least around 2008, that went through at least one recession and survive it type of stocks. And because we are working with large cap, you can pull those. If you have a brokerage account with a firm like Charles Schwab, for instance, they have filters. They have filters for you to pull stocks in bulk like that, and then you can work through it and select use your criteria to eliminate some. We just want stocks sold on either New York Stock Exchange or NASDAQ, and it took us a while to narrow it down, and we have maybe 300 or so left. And you could start easily with 2,000 type of stocks, just one market capitalization. We narrow it to about 300 or so, and from there we analyze them using Thinkorswim platform. Using maximum monthly chart to analyze them. And today the stocks we are going to analyze two, and the first one is NDAQ. So since NDAQ made it to our list, so with monthly chart, you will be able to see the chart far from you, like see multiple years on your screen to see the pattern of the chart, and you can trace the uptrend lines passing by the higher lows, the bottom of the mountain that the chart is drawing, and we trace few. And with that, in fact, to make it to our short list for 2025 list, we compare the highs that is making to make sure every year is making a high higher than the previous one. So, and that gave us, comparing those two, we know that, it's making higher highs. There are some that sometimes, some years, like this, for instance, it didn't really make a higher highs here compared to those two here. It took a while before, but that is the idea behind it. So once you know that is making higher, that was one thing, and we wanted to just make sure the lows are not like going lower than the previous one. So you want the higher highs to the higher lows and the higher highs to trace your uptrend lines and make sure that it is a good one. You wanted to put on your short list, because you have that long list, they all go to swing trade. You wanted to see which one that the patterns you like, the patterns that you wanted to make a short list version of it, because you want a list of stocks you can analyze within an hour or so every day if you have a full-time job. So 70, I found 70 to be doable for me. So therefore, from 300 or so, you can narrow it down to maybe 200 or 100, and from there you can narrow it to 70 or 50, whichever, based on your availability. At the end of the day, after the market close and you are back from work, or early in the morning before you go back to work, whichever time you think you are not too tired and you have your brain can function for you to analyze stocks you want to spend your money buying and put in your portfolio. And once you select them, you can trace those up lines, support lines that you want to buy on. Those are your entry point. And here we have two that we selected, and times to times you'll extend those lines as the chart is moving away from it. So we have those, and this is most likely that you can use it to rest on and start going up. So now that we this made it through our short list of stocks that we are going to trade this year, you will use maximum daily chart to do your daily and chart analysis. And since this we are going to analyze it to yesterday, we are doing the analysis on September 18, 2025, and the market closed yesterday, September 17, 2025, on green. Green highlighted price just means the price at the end of the day was higher than the price in the morning when the market opened. So the bar will be green on my chart here. But that does not mean a lot to me, in the sense that I'm trying to compare that price to where I wanted to buy. So this is our entry point. With long up to long swing trading strategy, we want to enter the trade or buy the stocks at the valley line, and we want to sell it at the peak of the mountain. But on either side of the spectrum, before you buy or before you sell, you will compare how the price behave around that area in the past. If you linger there, then you have time. You don't need to buy it right away. Once you start seeing a higher lows there, maybe you want to see more. And once it reach a new high, you can see how it did before. If it continued to go higher and higher, which it did here for a little bit before it pulled back to rest and then continue. So probably this one is the lowest point it got to. This, I'm not sure, or maybe it's just not done yet making that side of the mountain, but it tends to pull back like that, and then before it will come back again. So either way, it's good to compare what is happening now at either one of those point to how the price behaved there in the past. And that is the strategy that I use. I do not use indicator. I just use the valley line, that I like to call it, or support line, or uptrend line. That is what I really like to call it. For my entry point, I will trace few to see the one that the stock touch base with often, that is longer than 1 year time frame. That is the years here on the x-axis and the price on the y-axis, and this line is longer than 1 year. So this is 2024, this is 2025, this is 2023. So you can see that this line is way longer than that. When we went to the maximum monthly chart, you saw the line. So, and therefore that is where I wanted to buy. So until it's closer to it, this analysis is just going to be very quick because I'm not going to buy at this higher point. So therefore I will just look at it and then move to the next until it pull back to around here, and then I will start looking at it to see if it's making higher lows for me to buy. So the next one we are going to analyze is NVDA. So NVDA, we purchased a few times in 2024 using short up to long swing trading strategy, and in 2025 we wanted to use long up to long swing trading strategy. So when we are buying in 2024, we bought it again, it pulled back, make a new high. We didn't sell it, and guess what? It pulled back, went up, pulled back. Pretty much it was making lower highs or lower lows. This low is lower than that, which is lower than that, and so forth, until they touch base with this line. We could have purchased more from here, but we didn't, which I did with some, because it is the line that we like to buy, but I didn't do that. We just kept it in the portfolio because we buy at this higher price. It took us many months. We bought it around December and end up selling it around July. So the arrows at the bottom pointing up shows where we bought them, and the arrows on top facing down shows where we sold. So by putting those arrows on the chart, it automatically, I find it useful. It shows me where I bought it before and where I sold it before. So we got trapped in this trade for months. It came back to the valley, rest a little bit there, and just take off and start reaching some new highs. But shortly after, we just sold it around here, still in July, and we just sold it. But you can see that after we sold it, it continued to make new highs, and then from there it pulled back and start going up again. So yeah, and we didn't make a lot of profits, but we made some. So we got trapped in it for a while because we bought it at a higher price, and I do know that when it reach a new high, it'll pull back, it'll make a new high, it'll pull back. So it could well be using this line as the upside wall of the mountain as it's climbing higher and higher until it's done making the peaks, or until it reach the peaks of the new mountain that it is creating here. So there is a chance that it will continue, but because I bought it at this higher price, my concern is when it's pulling back to rest on this. Technically, if it's pulling back to rest on this line the way it did it here, I could still be making profits, because when I put my mouse here where I bought it, you can see the price corresponding to it is quite low here. So if it's using this support line to rest on as it's climbing up, I should still be making profit there, because any price corresponding to any stocks laying down on this line will still be higher than the price that I pay for mine higher up. So technically I could well remain in the trade. Once it reached this level that I sold it, I could well decide to remain in it, but I was okay with locking in that small profit and just get out. But that was a personal choice. Either way would have been okay as well, but I just prefer to sell it. I just bought it high. I prefer to sell it, use that money, and buy another one. But that is just how we are going to analyze the stocks. And this one, again, where it is now, I won't say to buy it because it's far from our entry point. Unless you are using, there are multiple strategies. There are strategies that buy when it start breaking out, making highs like that. They buy it because once it reaches a new high, it will have the strength to make higher highs. So there are strategies like that, and their last year, based on last year, short up to and swing strategy, I could use it here and continue buying a little bit. But again, I'm not going to do that. I just prefer to use long up to and swing trading strategy, buy it at the valley when they start going up, which is an indication that maybe it's done going down, and then wait until it reach a new high and see if I want to sell it or just stay in it for it to continue, pulling back a little bit and going higher up, pulling back a little bit, going higher up for for a while before I sell it and lock in some profit before it decided to go down to the value line again. But that is a strategy we use, and that is how we select the stocks to make up our watch list. Once you have the watch list, you just analyze that watch list on a daily basis if you can. You don't need to go look for stocks that you want to trade that day. With this strategy, you may not trade every day. You may not buy stocks every day. You may not sell stocks every day because you want them at a certain level before you buy. You may not find any in weeks that reach that level. That just allow you to just continue saving your money each time you get paid to save some. And there are some weeks you will find a lot of stocks that will reach where you want to buy them, the value line, and start going up, making higher lows. You will see multiple that will meet that criteria of, that criteria. For instance, this one, it pulled back, went up, pulled back, and you see this low is higher than this one. I tend to compare the red bars, but sometimes if the green is longer, I will use it as well. And this low is higher than this low. You want the green bar between them, and this low is higher than this one. So from this point, you can trace. And technically, if you are cautious, you'll want, let's say 1, 2, 3. You could easily purchase it here at the first green bar that follow a pullback, and with that pullback is higher than this one, and this one is higher than this one. So have few higher lows, you can enter the trade. But because it's a large cap stocks, it's not going to start going up right away. If you didn't buy it there, you could still buy it the next day. If you didn't buy it, that like 2 days later, if you didn't buy it there, this price went down a little bit compared to that day. So you could have bought it that second day as well, because that first green bar there, if you bought it there, you'll have lost a little bit the next day before it start going up again. I like to buy either the first or the second, but even in this though, even if you bought it the third day of those green bar there too, you will be fine because you are targeting long time frame. It will take a while buying it here for that to reach a new high here. So but the thing is just to buy close to your value line. It's not that you are going to buy on that line, because it might touch it, it might go below it, but you want to see it start going up, making higher lows. That's an indication that maybe it's going down. But sometimes it can turn around and go lower again before taking off. You just want to minimize the time you will get trapped. You might get trapped in the trade before it's really ready to go up. We are not trying to time it right necessarily. We are just trying to get stuck in it the way I got stuck in it for a while before it went back past that area. So, and you just start small, one share at a time. If you have money, let's say you save $1,000 and you want to trade with it, and you are buying stocks that is costing you, around $100 or less, or this one is $170, but where you will be buying it will be around 89, around 100. You can buy 10 stocks from your watch list with that $1,000. So, and some of them you will sell even before you buy some others. So that allows you to practice the strategy you are using, targeting small profit, maybe $1. Of course, depending on the stocks, you might have a higher profit, but you are just targeting $1 profit. It does not mean if you have $1 profit you will sell it though. No, it does not mean that with long option trading strategy, if you are practicing the strategy, it's going to take a while for you to sell it, and the profit will be more than that $1. That $1 is just a target profit minimum. And once you can prove to yourself that the strategy you are using is comparable with the stocks that you purchase with it, and you are able to make at least $1 profit after you pay your brokerage fees, then you know that that stocks, yes, is a keeper for your watch list with the strategy you are using. That allows you, by just buying one share or so, of course you have to take into consideration the brokerage fee you are going to pay to make sure you buy the minimum that will allow you to be able to pay those fees and still have at least $1 profit. And I'm just using one share here as an example, because chart swap that I use charge us few cents to sell stocks, not to buy. And if you hold it for months, maybe you may not even pay those few cents. So, but if you are using another brokerage firm, your scenario might be different. So just keep that in mind. But yeah, by just buying one share, you'll be able to stretch your money more. And if the stocks you are purchasing, you are spending about $100, you'll be able to save about $100 or so every month or every 2 months to buy a stock. As you are analyzing it and you are flagging the one that are around the support line, getting ready to go up, you'll be able to find money to buy a share of it and see if your strategy is using. That way you'll be able to try your stocks, each one of your stocks that will on your watch list that will have reached the support line during the year. You'll have a chance to buy most of them, to be able to test your strategy with them. Even if you don't buy one though, you'll still be able to see it, to see if you have purchased it, how the chart work, if you know it had been a good one. But yeah, just by testing, by practicing the strategy you are using, you'll be able to know stocks that are now doing well with it and take them out of your watch list and go back to your master list and pull other stocks from there to your watch list again for the new year. But you might even rotate your do that, you know, clean up of your watch list once a year or so. That way, until you will end up having a watch list that is working well with the customized trading strategy that you have, that you took time to customize to meet your personality type and your risk tolerance level. And from there, to make $2, you just buy 2 shares. To make, to increase your profit, you just buy more shares. But by then, you'll be more comfortable trading, swing trading, and trading with the strategy you are using and the stocks that you are trading. And you'll be familiar with those patterns as well. And then you'll see if, instead of waiting for those highs, when it's close to it, you might even end up buying it because you know that you bought it before, and it may not go too far below that line. Even if it goes below it, you don't mind staying in the trade. So that is the strategy that we are using. And if you are a full-time employee, because you don't buy every day, you don't sell every day, you won't have a lot of record to do for your trade on a weekly basis either. And if you don't have time to analyze stocks, they will still be there waiting for you because they move slowly. Thank you so much for your time. We thank you very much for all your comments. We thank you very much for watching our videos, and we thank you very much all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and NinaSoap.com our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. Thank you. For more of our swing trading related videos, will you please check the playlist in the description of this video. Thank you for your time.